Imagine if I told you there's a trade, a specific pattern that has worked nearly 80% of the time over the past 20 years. A trade that is so reliable, it is like clockwork. It happens at the same time every year, and those who know about it have quietly been stacking up profits, while the rest of us try and recover from the holidays. But here's the kicker. It's not a stock, it's not a crypto, it's not a shiny piece of metal. It is something that, in fact, most traders would never have even traded before. But it's happening right now. And if you're watching this, you're about to find out what it is, why it happens, and exactly how you can take advantage of it. Let's get into it. Our story is located in Thailand. Thailand is one of the most visited countries in the world, and it's not hard to see why. It's full of beautiful beaches, fantastic scenery, bustling cities, and stunning resorts. From December to January, Thailand is in its peak tourist season. During these months, millions of people travel to Thailand. Think about it for a second. Millions of people flying in, spending their money on food, flights, hotels, souvenirs, you name it. Here's what happens. When those tourists travel to Thailand, they bring their money. However, it won't be accepted as a currency they can use. They need Thai baht. That means they need to sell their own currency and buy Thai baht. This demand creates a natural inflow of foreign currency into Thailand. But here's the kicker. It strengthens the baht. Let's look at the numbers, because this isn't just a story, it's backed by data. Over the past 20 years, the Thai baht US dollar pair has strengthened 77.78% of the time between December 26th and January 26th. On average, the trade returns 1.68% during this period. But if you look even closer, in the winning years, it averages 2.64%. In 16 out of the 20 years, this trade has been profitable with gains as high as 7.94%. Of course, this is trading. There's been a few losing years. It's not foolproof. But a 3.69 Sharpe ratio and a low volatility of 8.62%? That's the kind of reliability a trader like me loves. So, what makes this seasonal play so reliable? 3 reasons. Number 1 is tourism inflows. December to January is peak tourism season. Millions of people transfer their currencies into Thai baht. In 2023 alone, tourism receipts hit 139 billion baht in December. Reason 2 is the year-end export settlements. You see, Thailand's economy thrives on exports. It makes up almost 65% of its GDP. At the end of the year, Thai exporters convert all their foreign currency sales back into baht to pay taxes, wages, and bonuses. And then reason number 3 is the low liquidity in global markets. Over the holiday period, global traders take a break. This thins out global market volatility. When you look at a unique asset like the baht, this lower liquidity in the market means it can amplify movements. This makes that seasonal impact immensely stronger. As traders, seasonal patterns like this give us a real edge. It's not just about making money, it's about understanding why the market moves so you can capitalize on it. Think of this seasonal play as a trade idea you can analyze yourself. Pair it with your fundamentals, pair it with your technicals, and run the analysis numbers yourself. Past performance is never an indicative of future performance, which is why it's important our risk management is in check. To recap, from December 26th to January 26th, over the past 20 years, the Thai baht US dollar pair has appreciated 78% of the time. It is driven by tourism, exports, and low global liquidity. This is the kind of edge expert traders look for. You want more insights? We've got a free newsletter that comes out every single week where we give you these actionable ideas from our analyst team. So what do you think? Will the pattern play out this year? Let's find out.